Today we're going to take a quick look at four companies: PayPal, Datadog, Shopify, and Activision. So unfortunately, all stocks are down as I am recording. There have been some downgrades and some things investors should keep an eye out. So let's get this episode started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
All right, if we start off with PayPal, stock is down roughly 3.1% as I am recording today's episode. We could see that one of the main reasons there have been some downgrades by Raymond James, downgrading ahead of earnings. They are downgrading from an outperform to a market perform. We do know that PayPal is expected to report their quarter 4 earnings on February 9th. And I do want to say, right now the overall market is cooling down a nice amount from the overall price up that we saw last week. We can see PayPal in the past 5 days is up roughly 3.9%. In year to date is up about 11%, but it is returning some of those gains. But we can see this stock is still down 31.7% for the past year. I want to say right now, I hate analyst downgrades. I'm not a huge fan of them, especially for long-term investors. Things like this, in my opinion, shouldn't change the overall thesis for a company. I think what's more important is those earnings that are expected to come out on quarter 4. Next, we do have Datadog. Datadog right now is down roughly 1.7%. We do see similar news. Datadog was downgraded by KeyBank as the company goes from an overweight to sector weight. And that's not the only thing affecting Datadog. Earlier last week, we did see that Datadogs were kind of trading a little bit lower because numerous kind of clouding and SaaS companies reported earnings and things weren't as great as investors might have been expecting. We can see right now Datadog, like I mentioned, down 1.7%, but in the past 5 days is up roughly 5%. So we can see very, very volatile time in the market right now. But we can see from that peak in the 5 days, the stock is down 12%. So this kind of overall just shows the volatility in the market right now. I do want to say for investors, be careful with this volatility. Just for me, my favorite way is the dollar cost averaging, where it helps me not put all my money at one time. Year to date, Datadog is up roughly 8.3%. Datadog is also expected to report earnings in this upcoming month, February 16th, before the market opens. So again, I don't think these downgrades are anything to really keep in mind of. I just want to say the market is very volatile, so we might continue to see strong updates and we might continue to see, unfortunately, strong red days. Next, if we take a closer look at one of my favorite companies, Shopify, outside of semiconductors, right? I am a huge fan of Shopify. Shopify has been a beast. It is running up a nice amount. We can see year to date, the stock is up roughly 46.7%. I've done a few videos on why I'm bullish on Shopify, and I'm happy I released those earlier on. We can see Shopify year to date is doing amazing. Unfortunately, when we see that kind of roundup in 1 month, we do expect volatility to kind of be in both directions. Right now, Shopify stock is down. One of the main reasons we do see Shopify shares are trading lower after DC Bank downgrades Shopify to sell from hold. Again, Shopify, in my opinion, the e-commerce market in general has so much room to grow. Again, that doesn't mean that volatility is not going to continue. I do believe Shopify is one of those stocks that, hey, because it's kind of overly priced, because the e-commerce market, the consumer market is at a weird state right now, we can see huge shifts in both directions. One of my favorite things was earlier, as an investor, I am a consumer of Shopify, so obviously I'm not too excited about this. On January 24th, we did see an increase in their planned pricing, which I think is great news. They also did release more kind of enterprise solutions for the e-commerce market, which is one of the main reasons I do believe Shopify stock has kind of increased dramatically in the past month or so. Again, Shopify, in my opinion, the e-commerce market is still pretty strong, and Shopify is a clear winner. Now, the final stock that I wanted to take a closer look at is Activision. Activision at the moment is down roughly 3.8%. We can see in the past 5 days, it's actually down roughly 5%. Year to date, the stock hasn't really moved much, right? This is a company, if we take a closer look in the 1 year, maybe in the max, right? Ever since that acquisition news, the stock hasn't really moved too much. It's been trading on the downward direction. Unfortunately for Activision, there has been a lot more pushback than I guess previously expected by by regulators on the acquisition with Microsoft. Some more news came out today that, hey, things might not be looking as strong as previously thought about. So that's kind of driving Activision stock price. In my opinion, I don't see what the real kind of pushback is. I think it's just the overall size of this company. I am a gamer, right? Or I used to be a gamer, but I can't believe that an acquisition with Microsoft will really kind of create some form of negative competitive space in the market. So I'm surprised it's getting as much pushback as it really is, but we can see the stocks right now are not reacting positive to it. So that's these 4 stocks. Like I mentioned, a very, very quick update of what's happening in the market. Let me know in the comments below. What do you think? Are you purchasing any of these stocks right now? What I'm really curious though is, do you believe this Activision deal is going to go through? Again, it seems like they're getting a lot more pushback. The company is expected to report earnings today after the market closes. I don't know if they'll share anything there. They might, but stay tuned. Take care, have a good day, and see you next time.